Welcome to Home Equity Secrets. I'm Carl Christian, CEO of the Nice Agent Co. Join me as we reveal how to learn to earn through smart homeownership. Discover expert insights, practical advice, and inspiring stories on turning your home into a powerful financial asset. Whether you are a first-time home buyer or a seasoned investor, let's unlock your home's true potential together. Welcome to Home Equity Secrets. Welcome to Home Equity Secret, the podcast that's going to show you exactly what to do when you're sitting on a pot of gold. My name is Carl Christian. I'm the CEO of the Nice Agent Company. This podcast is made for you. You're a homeowner. This is the one you want to listen to because you are about to find out everything you need to know in order to use your home equity the right way. But if you're an agent or realtor, trust me, this is the one episode you don't want to miss. If you're a loan officer, you better listen to this. If you have not subscribed yet, please subscribe because you are about to find out exactly how you can change your life. Today, I have someone that I'm going to interview. The person is, I have to put that disclaimer, a very good friend of mine, but I could not wait to bring you this person because I know the whole podcast is about to change today. So, Shaq, please tell everybody who you are and how you got started.
How's everybody doing? My name is Shaq Baydoun. I'm Shaq the Loan Guru. That's what they coined me as because I save deals all the time. And I love that phrase. I love having that reputation. I love working with people. I love when banks say no and I get to say yes. All of those things really tie into my personality and how much I love to help people. I think that's why Mr. Carl Christian and I get along so well, is because if you ask anybody, oh, you know Carl? How do you know him? And every conversation is he started as my realtor. It's not he's my realtor. It's he started as my realtor because this guy never just be your realtor. He starts as your realtor, then he becomes a friend, then he becomes family. You can't resist it. He's too good of a person, and that's how it is. So really, that's why I think, Carl and I get along so well. We work well together. There's a saying in the business world, and it's people don't care how much you know until they know how much you care. And Carl's the
That is
example of
true.
that. I love to live by that example. And that's what I think, really breeds long-term success in any career, not just real estate, not just mortgage brokering, whatever it is. I live in South Florida. I have 3 kids, a dog, and a happy wife. I say happy wife because that's an important thing. It's not just a wife. I do whatever it takes to keep everyone happy. I love my life. I feel very blessed to be where I am and where I live and do what I do. I pride myself on being at all my kids' events. I think family is more important than anything else in the world.
If you want to know how much this guy is not selfish, so of course, his wife is really happy. So what he did, he wrote a book about it to make everybody make their wife happy. Tell us about the book, man.
I did. So my friends, they're like, man, you don't fight with your wife? How do you not fight with your wife? I'm like, it's not that hard to not fight with your wife. You just got to think for a second before you do most things, and then you'll never fight with your wife. They're like, that doesn't make sense. That doesn't make any sense at all. I'm like, I'm going to write down a few things for you. So roughly 13, 14 years ago, I started just jotting down a few things. And I'm like, you know what? Let me just jot down a few more. And in like 5 days, I had like 100 pages of stuff, just like stuff I thought of that I do
This
in
is
certain
crazy.
scenarios. It is. That's really how it happened. And then I'm like, let me put this out there. Maybe somebody wants to publish it. I don't know. So I sent it out, and this guy who he's a marriage counselor, but a doctor and a psychologist. And he goes, I'm going to publish your book. And the reason is because you're not divorced, you're not a doctor, you're not a divorce lawyer, you're just a guy who's married and your wife's happy. I'm like, you know what? That sounds amazing. So I did publish it. It's on Amazon. Feel free to order it. The Perfect Husband, the easiest job in the world.
Hey, I'm telling everybody, I did read this book, and trust me, I did listen to your advice, and I do have a happy wife at home.
There you go. There you go.
Jack, before we dive into it, tell everybody what makes you so different when it comes to doing loans for your clients.
So I don't want to say that I'm not lazy, but what I look at is I think the biggest flaw in the mortgage business and real estate and anything transactional that's long term is communication. And I feel like in so many transactions, whether it's a problem with the file or getting the file done or needing a document or just telling people what's going on or answering the phone when people are hot, because we're in an industry where it's emotional. It is not always calculated. Even though it's numbers, people buying houses is not just about numbers. It's about falling in love with the house and picturing your family there and being there on that Saturday. And that Saturday, it needs to happen. And if I'm not available, then it doesn't happen. That's how it is. And in reality, if I don't act while the client's hot and they don't know that I care, that they get the house that they want, and I do whatever it takes to make that happen, I have no chance of being really long-term successful. That's the most important separator, I think, in our business is urgency and communication. Be there, be ready without any excuses. If I'm on a boat or in the ocean, and you can attest to this, and my client needs a
I was about
pre-approval,
to bring it up.
yeah, no matter what I'm doing, I better be able to get my realtor and my client their approval letter in 30 minutes, or I'm not doing my job.
And Shaq, it is one thing that I see that is dying. Like I was interviewing somebody, a new agent, and he was like, "Yeah, the furthest I will go is Palm Beach County." Or he would say, "Oh, you know what? Yeah, Sunday I'm not working." Or I'm like, "But you have to understand, I don't mind you knowing that, hey, you have your limit or your boundaries. But if you getting started in a business, if you're becoming a doctor and you have a class that's going to start at 10 o'clock p.m., you are not going to say, I'm not doing that class. So if you're
Right.
getting started in a business, loan officers, realtors, and your client tells you, hey, I need you to drive to Jacksonville, I'm sorry, you're not in a position yet in your life to say, oh, no, you know what? I'm not driving to Jacksonville. And this is what makes Shaq and I work so well together. It does not matter. You are the focus. It's you. It's all about you. It's always you. So you say, Carl, do this, Shaq, do that. We just do it. Because at the end of the day, you are the most important person in the whole business that we are running. Without you, there's no business. And
And
nobody
Carl,
gets
to
that.
touch on that, to really like piggyback on that, it doesn't have to be hard. It's 2024. There is no reason why you have to say no to anything. And then I will tell you, so I've been doing this now about 20 years. My obsession has never been make money or figure out how to make more
Yeah.
money or do this or do that. It's always been, how do I do this in less time and how do I make it easier? Those are the only two things I've ever thought about. That's why you see most people think I'm never working, but I'm always working. I'm at the kids' stuff at 10 a.m., at 1 p.m., at 2 p.m., at 5 p.m. But in that time, I worked 5 hours, but nobody saw it.
Yeah.
That's the important thing is how do I make myself flexible so I can shift to whatever people need me to do? I'm there for them. But at the same time, I can be there for my family. But my clients know no matter what, they text me sometimes 1 in the morning and I'll respond. And they're like, what? How
Yeah.
am I getting a response right now? This is crazy. Like, that's so
Yeah.
not what they're used to. And I'm like, why should I leave it till tomorrow? Why? I saw it. Here's a quick response. It's done. It's off my head.
If I don't answer it, I can't sleep. So,
There you go. Same here. I need to have an empty inbox, empty messages, no notifications. Then my day is done.
No, it is. So for the homeowner, Shaq, let's go back to the beginning. How do
Okay.
you describe what a home equity is for them? What is a home equity? How can they make their home gain more equity if it's possible? What are your thoughts about that?
So the obvious things are, keep your home as presentable as possible, do upgrades that matter, things like that. The normal things people think of, I'm going to increase my home's value by spending money on it. Great. That does happen. Increasing your home's value at the end of the day has one purpose, and it's to increase your net worth. It's not about your house because your house doesn't have its own bank account. It doesn't have a profile. It's a house, it's an item. But you, the owner of the house, have equity, have a dollar amount tied to your name, a net worth. So this is about building wealth. Yes, it starts with home ownership, and I'll touch later on how so many people I talk to say, I wish I bought a house 5 years ago, because that's the best time to buy a house. The best time to buy a house is always years ago, not
Yeah.
today. But it is today because we're in today. The point is, so many people look back and think, man, I wish I owned a house. But the why is so that I could have built wealth. That's why they say, I wish I bought a house 5 years ago. It's not because I just wish I owned it. Why? Who cares? You own something, it
Mm.
doesn't matter. It's because you're building wealth and you could have started building wealth 5 years ago. The point here is that home equity is a tool, it is not something meant to be left alone. And that's the thing that a lot of people forget. They think maybe it's hard, maybe I couldn't take it, maybe it's not smart to take it, because in 1950, mortgage rates were 12% and 15%. And the American dream was pay off your house. That's the mission in
Yeah,
life.
that's true.
And now, because it's no longer debt, it is leverage. I'm going to give you what the difference is really quick. Debt is when you borrow money more than you can earn it at. So it's debt. You're paying in and not earning back more potential. Leverage is when you borrow money at a lower rate of return than what you're spending the money on. So in that case, you put yourself in a position where you're growing. You're earning more than you're paying. So it's leverage. Now, what do we leverage for? Most people look at people who own a lot of properties and think, man, I don't know how that guy got that rich to buy all those properties. He's
Yeah.
so rich, or his family must have had money, or he won the lottery, so he bought all these properties. None of that is true in 99% of cases. Yes, there's the one-offs. There's Trumps in the world. It's not like they're not there. But at the same time, most of those people bought a house when they were really young, sat on it for 5 years, sold it, took that equity, bought two houses,
Yeah.
refinanced those, bought more houses, refinanced those, bought more houses. So they realized early on, hey, my house is sitting there with $300,000 that I can't use, which is really stupid. That is a big 0% savings account. Once it's there, I can't touch it. And the bank, the house, which is the bank, doesn't give me any money for it. It just sits there. So why not take that money? Let's buy something with it, something that earns money, something that offsets things. So I'll give you a quick example, because in the beginning you asked me about family.
Let me ask it. Let me ask it so you can give it. So,
Go
guys,
ahead.
you already know this podcast, we always ask the same question. Shaq, a couple, like they're in their 20s, early 30s, toddlers, sitting on a house, $500,000 equity. What do you advise them?
So my advice is you're sitting on this $500,000 in equity. You look at all your other accounts. You're like, all right, we have $5,000 in the bank. We have a 401k also that we can't touch, but at least it's earning money. We have IRAs, whatever else we have, it's out there. But again, none of it is usable right this minute. It's just nice to say that I have it. So you're looking at your finances like, man, we have no money. We have nothing except this big 0% savings account, this big home equity that we're sitting on that is not doing anything for us. Our kids are 2 and 3 and 4. Let's say they're young, right? Because I lived it. I was there. I've been in that position. In that position, again, you got to think about it's not just money that's on your mind. It's sleep deprivation, it's messes to clean up, it's doctor visits, it's expenses for daycare, it's all sorts of things that you can offset by using your home's equity and not dealing with everything yourself and not making it where it's all right. Yep, I have a $500,000 0% savings account. I can't touch it. I can't do anything with it. Pull out, let's say, I'm not saying wipe it all out, but let's say you pull out 250,000, just to put an example on it. If you pull out 250,000, you buy, let's say, a duplex in Florida, let's say Northern Florida, Central Florida. That duplex will pay you $2,000 a month. Even after expenses, you might be at like 1,600 a month. Guess what you just did? That money is still there. You didn't burn $250,000. You bought a
You moved it.
$250,000 asset. So all
Yeah.
you did was shift your
Yeah.
0% savings account into now a 10% savings account that also grows with inflation. So let's talk about that. Your kids were 2 and 3 and 4, right? Now you earn 1,600 a month for 10 years. 1,600 times 120 is almost $200,000. It's a lot of money that you've earned on that money that was just sitting. Aside from that, you take that leverage. Now that house you bought for 250 in 10 years, guess what? That's also worth 500. So now you have more equity in that place. The equity you pulled out of your house, the 250, guess what? That's back already too. Because in 10 years, your house didn't go down. It went up another 3, 400, 500,000, because that's what keeps happening. This is how we build wealth. But now you're not building wealth on one property, you're building wealth on two. And you're offsetting your expenses by having some other stream of income. Now, when you learn after a year or two that you did it, you're like, man, that was a really good idea. I'm going to do that again and again and again. Before you know it, you have 30 doors and
Yeah.
your kids are 18 and they're getting married. And then you're like, hey, here's a wedding gift. Here's 4 rental properties. that will make you and your spouse more comfortable, $5,000 a month in income to offset whatever expenses you guys have, because I don't want you to go through the same struggle I did. I'm setting you up for your future so that you don't have to struggle the way that I did. How amazing is that?
Wow. I told you guys this podcast was going to change things. But Shaq, let's be real. Why not everybody doing it? How do you overcome that little fear that may, like when you refinance, you do acquire another debt, or what's gonna happen if you do lose? People do think about those things, but you were in the situation. I was in the situation. So how do you overcome that fear?
So that's a good question. So with fear, there's reward. If it wasn't scary, it's probably not worth it. Otherwise, everybody would do it. Now, you got to think about long term and what happens. First of all, if it's something you can't afford, you should never do it. Let's be clear about that. If you're living in a house that has 500,000 in equity and you make just enough money to pay your $150,000 mortgage, you should sell that house, take all that cash, invest it wisely, and not keep a debt. Number one,
Yes.
that's what you should do. And then go rent somewhere or do something different, but use that equity you earned because you earned it by buying the house. It's not free. You worked hard to buy the house, you worked hard to pay the payments. This is hard earned money. It's not free money from the economy or whatever you want to call it. It's not luck, it's strategy. You bought a house at a good time, you spent money, you sacrificed money for a down payment, and you paid payments on it. This is an investment. It's sweat, blood, and tears that has a big reward that you saw. All you got to do is keep repeating that reward. That 500,000 in equity didn't come from nowhere. It came from you taking the same risk. Use that memory and remember that you did it and it worked out great. And it wasn't scary in the end. Everything's scary, especially having kids, Carl. You have toddlers already. We're talking about these people. These people were terrified. They had a baby in their hand for the first time. Holy crap, what do I do now? How do I keep it alive? What do I feed it? How do I survive this? How do I pay for it? We already weren't rich before. Now we have a kid to pay for. All those things, and you figured it out. Don't live in fear. You can do it. You did it before.
You know what I just love out of that example is you can use your house as a rocket to wealth, or you can use it as a trampoline to wealth. And basically, what he just said, the very first example, you take money out and you go duplicate it, or you sell the house, go to something smaller, and then you duplicate, which means that it's a trampoline. The lowest you go, the higher you go. And or a rocket, if you're ready, just put the fuel on and boom, you're out. And a
Absolutely.
lot people are not afraid of going backwards, but more of them are actually afraid. They feel like, hey, I'm already living in that 5-bedroom house. And then what if right now I'm going to go in a 3-bedroom house? What are my friends going to think? Like, oh, I'm going to feel like a failure. But the truth is, you can't go through life without a plan. We're not asking you to go backwards and leave backwards. We're asking you to go backward in order for you to be better off in 10 years and 15 years. Everybody always say that. I'll do anything for my kids. Okay, what Shaq just asked you, if you go back in a 2-bedroom house, your kid will be a millionaire. Are you thinking twice? And that is what most people needs to understand. You have to be
Carl,
able
real
to
quick
go
to piggyback
backward.
on what you said, the whole thing about being embarrassed with friends. I can't tell you how many times we're in a scenario where I'll use myself as an example, right? So I have several rentals. I have a house in the Keys, a small house, this and that. But when I'm with my friends who live in their $2 million house and that's all they got, and then they find out, wait, you own a bunch of land and properties? You own a house in the Keys? What are you talking about? I'm like, yeah. Then I go home laughing. I'm like, oh man, they are envying me, not the other way around.
I'm gonna tell you a story. I'm sitting with all my friends, and then one of them was like, Carl, when are you gonna buy a big house so we can have parties at your house? And I'm like, did he really just say that to me when I'm sitting on all of those properties? And then it's now that he's barely getting to 3 of them. And I'm like, what is this guy's telling me? Like, I love my house, a 3-bedroom house. It's just us.
Exactly.
I'm good with it. You know?
Same
Yeah.
here. I'm good
So
with it. I would
you
rather invest more, keep my modest house, enjoy my life carefree, and everything is great.
your family is happy. That's all that matters. I don't think I have to get a 10-bedroom house to make my family happy. If that's the reason, there's a problem in the house. Okay. I
Yes.
always tell everybody that. So if I have $500,000 today, Do I go and buy myself a $2 million home or buy myself a duplex? Which one's going to help me? I tell everybody, you know me, I always tell them, but no, don't refinance. The reason why I'm saying don't refinance, guys, you can't refinance your way to Dubai. You refinance your way, your life to wealth. You refinance for that reason. A lot of people, I've seen it, they refinance or take a HELOC and go travel the world. This, I'm sorry, I'm against it. I don't think you should do it because, like Shaq says, you have a bank at your disposal. What does a bank do? It's not saving money, it's investing money. So you can't use your bank for you to go have leisure, pleasure, fun. No, you use it in order for you to create income instead of asset. Because this is the first word he said, net worth. So today, before you go to Dubai, ask yourself, what is my net worth? And if you're not happy with it, I guess you should not buy that ticket. That's the way I see it.
And how much of my net worth can I use? That's a big question. If my net worth, 99% of it can't be touched, it's not really it's not useful. I want to make it useful. Not all of it, but a lot of it.
I know you work a lot with foreign nationals because a lot of people listening to us, they may not even be in the US. So you do work with foreign nationals. How do you help a foreign national? What type of loans there is out there that they can even start buying properties and then maybe do exactly what we're doing? Why not?
Right. A lot of them do. A lot of them, once they find out, a lot of them do. So you'd be surprised how many foreign nationals they do buy here. It's actually a big chunk in South Florida, especially. And they come here and they say, I have $300,000. Find me a house for $300,000. That's all they think they can do. That's the sad part. So then they find out later, usually too late, that I could have got a mortgage. It must be really hard.
That's true.
Super hard, right? That's what they think. So think about any loan. I'm not just foreign nationals, because you had asked me earlier too about co-ops and condo hotels and then unique properties like that, and then also foreign nationals and people with an ITIN. At the end of the day, Carl, the way I look at every single transaction is I have a borrower, I have a checklist, I need to fill this. That's it. That's the whole thing. I don't care
tell
what.
Them that's the way you live your life, period.
I mean, in reality, that's the truth because it's that simple. Yes, it's different items on the checklist, but it's a checklist. And if you don't fit everyone, hey, work on this and come back to me. It's not have a nice life. I never do that. You know me. That never happens. So let's say a foreign national comes to me. They may think a lot of things up front because there's so much misinformation out there. So they'll think, well, I got to be perfect in my country if I'm going to invest in another country. Otherwise, forget it. There's no way anyone's going to even entertain doing something with me. When you realize later, well, actually, it's really not as hard as it seems. So in many cases, I'll just give you the quick lowdown. So yes, you can't come in and do an FHA loan as a foreign national and put 3% down. You can't do that.
Yeah.
But if coming in as a foreign national, putting down, let's say 25% for a decently qualified borrower, they got to put down just 25%. That's it. 25% down payment. And then we do full doc. I'm doing this because most people hear full doc and they're like, full tax returns, blood samples, full bank statements for every month for the rest of my life, and all these other crazy things. And that's not what it means. Believe it or not, with most banks, and this, I'm going to say this sounds kind of crazy, full doc is a letter from a CPA. That's it. No tax return, no nothing. Just CPA that says, yeah, this guy made this much last year and this much the year before, and this is how much he made this year. Granted, it needs to be true, but at the same time, it's way easier than people think.
Yeah.
It is not sending hundreds of pages of files and all this stuff. It's nothing like that. So then most of my foreign national clients, once they finish, they're like, bro, that was way easier than I thought it was going to be. I can't believe like all I had to do was that this whole time. I bought 9 properties before cash thinking, or I did hard money, which is even worse, when I didn't have to. They put down 40% and take a 14% loan and 12%, and they have to pay it off in 1 year. None of those things have to happen because education is important. Educating clients, having podcasts like this is super important because you're spreading correct information and expectations for people. I will tell you, and I'll touch on not just foreign nationals, but self-employed borrowers, because I think you're going to ask me that in a minute.
Yes, I was going to.
Yeah. So this really correlates. And I think the biggest flaw in both of those is overthinking. and having a bad experience once before. Because foreign nationals, they trust realtors. They trust the person who they ask, their relative who's in the country, not just a realtor. And they say, hey, can I get a mortgage? Like, yeah, you could get a hard money loan. And that's it. That's their whole life going forward. They don't ask a single follow-up question. They're like, yeah, I get a hard money loan. That's what I can do. And they go and live their whole life as if that's the only option. And the sad part of that is having that misinformation discourages them and
Yeah.
makes them think, you know what, it's not worth it to buy this property because I have to put 40% down and I have to have a rate of 12% and the return is not going to be good enough. Where if they talk to me, they could have got a mortgage at 7% with 25% down. That changes everything. It changes the whole thing. Now, with self-employed borrowers, same concept. They walk into their bank where they have all their money, sometimes hundreds of thousands of dollars, and they say, I want to buy a house for 600,000. And the banker goes, okay, cool, great. Yeah, I know you have a lot of money. We're going to fill out an application. And he's like, man, I'm solid. I'm a solid borrower. He fills out an application with Chase. And then 2 weeks go by. He doesn't hear a word. And then 3 weeks later, he receives a letter in the mail that says, sorry, thanks for applying, but we can't do your loan. So he's like, because I'm self employed, I can't get a mortgage. That's his mentality now.
Yeah.
And it's so not true.
It's not
Again,
true.
again, it's a checklist. And if we satisfy the needs in the checklist properly, there are many lenders that do it. And the lenders have their own guidelines. It's not like it's all just black and white. It isn't. That's why I have so many lenders. You asked me how many do you have? It's actually 80 now, by the way. It's not 40.
Nice.
Yeah, and there's a reason, but there's a reason for that. And it's because just because I have a lender who will do a loan without tax returns, that doesn't mean I'm done because underwriters are human. They're human beings. And one underwriter can look at something and say, this is a big deal to me, and I don't want to do it because of this. And another underwriter can look at it and say, I'm totally fine with this. I don't like this. And when you mesh them and you figure out what this lender likes and what that lender doesn't like and whatever, you give them what they like. So you have a niche for each lender. So you've worked with me for many years now. You see how many different banks come up like when I'm doing these. It's always a different bank. It's not like I just use one and you see the same one every time. And I know with a lot of brokers, you do see that. Where
Yeah,
that
they
one
do.
bank, every single time, it's exactly the same. I never do that, not just for pricing, because that's a big one for me. I want my clients to get the best price. But aside from that, is because not every client matches every lender for many reasons. It's a variety of reasons. It's not always just black and white. But again, when I have a lender that does something, I want five more that do that same thing so that they know, hey, you mess up, there's competition. You're not keeping this deal. And you mess up, my client's not going home disappointed and thinking that they're done. I switch lenders, we find a way to get it done in time. Sometimes, believe it or not, Carl, I will send the same deal to 3 or 4 lenders at submission in the beginning and quadruple my
You
workload.
do that. I know you do that.
I do that. And that's way more work for me. But I do that because then I get all 4 approvals. I'm like, all right, which one's the cleanest and which one's the lowest price? I'm like, hey, you won this deal. Let's cancel out the other 3. I don't care if they did work and they don't get the deal. I did the same amount of work. I did 4 times the work actually. And I'm like, we're canceling 3 of those. This is the one for my client, and that's the one we're moving forward with. And that's because the clients matter. The banks matter too. I'm not saying they don't, they're great. But at the same time, they're here to make money. I'm here to save my clients money.
That's it. There's a lot of realtors that's probably watching and listening to us right now. If you have not subscribed yet, please subscribe to the podcast, Home Equity Secrets, because you will never miss one little bit of information because we're giving it all out. Shaq, give a real estate agent that just got started, what are the best advice for them to grow to success?
So, a big flaw with most realtors, especially in the beginning, is overthinking. And a lot of it has to do with, man, I'm not that qualified yet. I don't know that much. So maybe I'm not positioned to help this person, or maybe this, or maybe that. And I don't have a lot of lenders, or maybe this client won't qualify. So should I waste my time with them? There's so much thought that goes in. Whereas they really just need to approach it head on, pedal to the metal. Every client's going to work no matter what happens. Every client wants to work with me and they deserve to work with me because I'm going to give them a level of service that other people are not going to be willing to. Walk with that pride and work with that pride and connect with, and I always say this, options. Never just use me. I tell you, even after all these years, do I tell you ever to just use me? No, I don't. You need to have options for lenders. You need to have options for clients. You need to have options for properties. It's important to keep options so that you will walk confidently knowing you're doing your best. So the client should have zero reason not to work with you. Zero. Absolutely none. And again, no matter how, if the client tells you, I have horrible credit, I have no money, I don't think I can buy a house, and my job starts in 5 days. No problem. Let me connect you with my lender. It doesn't matter. I want to be the filter for them. Me, not
Yes.
just me. I say I as the mortgage broker, whoever they want to work with, whether it's me or somebody else. But let your mortgage broker be the filter. You are not an underwriter. You're not a lender. You are a relationship builder. That's what
That's
realtors
it.
do. You
That's
are
it.
a relationship builder. It is not to open doors like they say. It's way, oh my God, it's so funny when I hear that. You are in charge as the realtor to keep everybody in cohesion.
You're the
Everybody,
quarterback.
appraiser,
You're the
title,
quarterback.
lender, you're in charge. And again, no one's going to do it better than you. You committed to this career, you made yourself available for these clients, and they deserve to work with you. Keep that
Another
mentality.
another piece of advice that I want to give to anybody that is new. I heard that so many times in my career. Carl, this client is wasting my time. Carl, I just wasted my time. I'm sorry to tell you, there's no such things as you waste your time. You are doing exactly what you're supposed to do at the time you're supposed to do it with the person you're doing it. If it was not supposed to happen, trust me, you wouldn't be there. I do believe that, like you said, it's a relationship builder. Maybe at that moment, you're building a relationship with that person that's going to last 15, 20, 30 years. My biggest client bought and sold many properties, never with me. I'm going to repeat that. My biggest client bought and sold many properties, never with me. And you're going to ask, how is that person your biggest client? Till today, because of this person, I'm selling at least guaranteed $20 million worth of properties. My management company, his friends, has 40% of it. So it's to show you that, am I mad at him when I hear, oh, he just sold the property for $2 million? No, I'm not. I'm actually clapping. And he will
Yeah.
call me, Carl, check that property for me. Carl, what do you think about this? Carl, what do you think about that? And I will answer every time. But and I always ask him, but why you never use me? He was like, but Carl, like the same way with everybody. I'm doing what's right for my family. If at the time it's about you, then yes, you're gonna do it. But if somebody bring me a deal that's good for me, I'm not gonna tell them no because I know Carl. I love you, but I have to do what's right for my family. And if you're listening to this, you'll be like, why is he so mean? But he was not. He's actually teaching me the right lesson. Carl, help my friend. By helping his friend, Carl is doing what's best for Carl's family. It's just the way it's supposed to be. So
And
yes,
Carl, to
you
piggyback
never
on what you're
waste your
saying,
time.
the clients don't waste your time. You do.
Never,
You do.
never.
So if you feel a client wasted your time, you did waste your time. Here's why. I'm going to explain it. So let's say I'm talking to a client, right? And they're not going to work with me. No problem. But they're with somebody, right? Or they're going to something, or they have a work thing where they just bought a house, but they work in a big office, right? I can choose. I have a choice to make, right? I can be sour and say, man, they didn't work with me. That's messed up. Or, or I can keep our relationship great, let them remember me. When they close on the property, even if they didn't use me, I go visit them at work and I give them flowers or chocolates and say, hey, I just want to congratulate you on your house purchase.
I
Who
would.
was that? Who was that? Your realtor? No, I didn't use him, but he wanted to congratulate me. Holy crap, who's that guy? That's how you build a relationship. You can
That's it.
choose to waste that prospect, or you can let it be a benefit to you. That's your
That's
choice to
it.
make.
That's it.
Aside from that, it's also even like I have it, for example, I'll be working with you, Carl, and the listing agent will call me 20 times in the process, right? The first time they call me, obviously I don't have the number saved yet or whatever. The second I hang up with them, what do you think the first thing I do is?
You
Save their
put them,
number. The
yeah,
first
put
thing
them on
I
your
do.
CRM.
The first
That's
thing I do. And then I can't wait until they call me again. You know why? Because when they call me, I say, hey, Anna, instead of hello. They're like, oh, wow, this guy remembers me. Then the third call, hey, are we closing? They don't call me. I call them because I have their number saved. Hey, I just want to let you know we're all set. We're clear to close. Man, really, it was so good working with you. You actually answer my calls, this and that. Yeah, here's my niche products. Here's what I do. Here's the things I'm good at. Now, instead of taking that realtor's call, this realtor keeps bothering me while I'm trying to process this loan. No, I choose to turn that into a prospect. Any
Always.
person you speak with, any interaction you have with anybody is a prospect, period.
All right. I told you guys this episode was going to be a little longer. So we have two more questions for Shaq. Shaq, talks to us about condos, co-ops, because we do have a lot of people that are outside of the Florida market and then they would like to get here and they're hearing that condos are going crazy. The association fees are going ridiculous. What are your thoughts on that?
I'm going to tell you what I really like, my theory about this, because Florida is not the only market that has condos. I will say that in the last 5 years, South Florida has been the most mismanaged condo market in the world because unfortunately, the condo associations, they were charging money, they're hiring their friends, nobody's doing work, everything's being mismanaged and it's improper. What's happening now is there is a big fear, like you said. Most people coming in, they're like, man, these special assessments, these things, this 40-year certification, all that is noise right now. And it is valid. It's not invalid. There are special assessments. There are 40-year recertifications. There are things they have to go through and repair and whatever. So we're going through that phase. Look at it like almost like a baseball team. You know, that rebuild, you get rid
Yeah.
of all your stars, and now you have all the rookies and they need training. But then you look 5 years from now and you're like, man, this team is stacked. They're all great. And that's what's happening. We're having that shift right now where condo associations, the regulations getting tighter, so they all have to start acting correct. And what I think is going to happen in South Florida, especially, is we're going to get that like San Francisco style market where it's like ridiculously expensive for any condo, especially something with water view or something like that. Because not only are you going to have beautiful lifestyle, but you're going to have a well-run association without surprises, without any flaws, without violations, where the building's rock solid. All these things are going to happen. And if you wait too long and you let the prices shoot back up, then you're buying it in that price range. It's okay. It's not like you have to buy it now. It doesn't matter. Either way, whatever you want to look at and what you invest in is up to you. But that condo thing, I can promise you one thing. They're not going to tear down all these buildings. There's no way that's going to happen.
No, that's not
And
happening.
there's too many people moving here for it to be sustainable in a single family environment. So there's no way that you're going to have that instance where no, nobody's going to buy condos anymore and all these buildings are going to sit empty and people are just going to buy houses because houses are becoming unaffordable already. And it's going to get worse because these condos that are occupied right now were these young professionals who were just starting their life and they were just starting with jobs. They were making like 80,000 a year, 60,000 a year. And now they're making 120, 150, 180. So they have more money, but they don't have a family yet. They don't have expenses yet. So these people are going to start moving to single family homes. They can afford it. Whereas you have our families now with they have two people making 120, two people making 140. They can't really buy a house for $1 million or $2 million. And unfortunately, the South Florida market eventually is going to be there where if you want a house with land, you're going to spend minimum $1 million. I don't care where
Yeah,
you are in the
I
worst
believe.
area. That is going to happen. So those condos are going to be very appealing to anybody who's not looking to spend over $1 million, but they're still going to be up there in price. So that competition is going to get pretty stiff.
Yep,
It
I
is.
believe that. Shaq, tell everybody how they can reach you, how they can connect with you.
So the best way is just go to my website, shaqtheloanguru.com. That's the easiest way. It's got everything there. There's a link to WhatsApp. Obviously, you can just click there right away and start applying. You can upload all your documents. I try to make everything as easy as possible. But honestly, Carl, you know me, man. Call my cell 24 hours a day. It doesn't matter. My cell number is 313-418-9008. Text me WhatsApp, call me, text me, whatever it is. I'm here
I
for you.
will tell you, if you're listening to this, please, if you are a homeowner, call Shaq. You're a realtor, call Shaq. Even if you're a loan officer, I'm telling you, call Shaq. Whatever advice he can give you, this guy, take the word selfish, it doesn't exist for him. So please,
It's
always
true.
reach out to Shaq. Shaq, this concludes our episode. For everybody that is listening to us, please do not forget to subscribe. Home Equity Secret. My name is Carl Christian. I'm the CEO of the Nice Agent Company. Shaq, it was a pleasure to have you. Do you have any final words for everybody?
No, just looking forward to what's to come, man. I think it's going to be great.
It will be. Thank you so much, everybody. Thank you again. See you next time. Thank you for tuning into Home Equity Secrets. I'm Carl Christian, and I hope you found today's episode insightful and inspiring. Remember, you can learn to earn how to set up your real estate portfolio to achieve financial freedom. I dedicate my life to helping homeowners like you unlock the potential of their homes in South Florida. Hit me up if you're in the area and let's chat. Please subscribe, rate, and leave a review. For more tips and updates, follow us on social media and visit our website. Thank you for listening.